Welcome and thank you for joining. This is part 2 of our 4-part series on navigating Japan power options with Lacima Trader. In our last video, we covered the process of generating and profiling a forward curve to create our best prediction of how the market should move in the future. In this video, we're going to explore how to simulate power prices. We'll walk through not only how to simulate prices, but why that's such an important step in the process. As per our last video, we'll be using an example that reflects real-world Japanese power markets. Please note, this is for illustrative purposes only, and does not constitute a trading recommendation. While we have taken care in preparing this example, we cannot guarantee the accuracy of all data. For this video, we're seeking to understand market risk by simulating Tokyo power prices. Lacima Trader Sim is a powerful, flexible Monte Carlo simulation engine that allows me to analyze multiple variables at once. But for this example, we'll simplify it to only modeling one, the Tokyo power price. To start, we need to input the historical spot price data and the current forward quotes. Using these, we construct a forward curve. This step was the subject of the first video. Then we can use Lacima Trader to calculate the statistics of the historical spot data that we can then use to create simulations. Lacima Trader analyzes historical prices and calculates key parameters such as volatility, which is calculated from the standard deviation, mean reversion, which is the bias movements have towards the forward curve, as well as jump volatility and jump frequency, which can be added to further refined simulations. When simulating multiple variables, Lacima Trader can also calculate the correlation between them, and include it in the simulated movements. On the left of this sheet are the parameters that Lacima Trader calculated, and on the right are the values I inputted into the simulation. As you can see, for this example the only thing I've changed is to set the two jump parameters, jump volatility and jump frequency, to 0. For this example, I've had Lacima Trader create categorized volatilities, so it separately calculated the standard deviation for peak versus off-peak periods for each quarter. This causes the simulations to move differently depending on time of day and time of year, to closer reflect reality. Here I've plotted 5 half-hourly Tokyo power price simulations, along with the forward curve and the historical data for the corresponding period from the year before. You can see that the simulated prices have a volatility and shape similar to the historical price, and a mean close to the forward curve. Lacima Trader can easily handle running thousands of simulations like these, from which we can evaluate risk. Accurate analysis is key to managing risk and making informed trading decisions in the Japanese power market. Simulating price movements allows you to appropriately assess market risks and optimize your trading decisions. Lacima Trader Sim's flexible multivariable design allows simulation of almost any variable, ensuring it can accommodate your unique analysis needs. That's it for part 2 of our series, Simulating Prices. If you have any questions about anything I've covered today, or how Lacima Trader Sim can support your specific strategies, please reach out to the team using the details shown on screen. Otherwise, join us next week for part 3, Valuing Japan Power Options. See you then.